Ivan Colhoun, head of Australian Economics and Property Research at ANZ, joins us. Now, ANZ, as we know, only the three institutions that got that RBA decision right this week, Ivan. So congrats on that, and hopefully we'll talk to you next time the RBA comes out with their monetary policy. Now, what about this monetary statement? What are you reading between the lines here?
Well, look, a lot of it was very similar to the statement on Tuesday after they didn't move rates. They said the US economy is improving, China's still pretty strong, and Europe's still quite cloudy, though financial market sentiment's improved, and even the moves by the ECB have improved things and stabilised things in Europe. So none of that has changed very much. And in the Australian economy, we've still got this mining boom coming through even more strongly, but a lot of sectoral variation where manufacturing, some retail, some tourism are finding things quite tough. So we've got all of these factors and strains on the economy, and that's making their job difficult. The two new things, I think, in this statement that I've had time to read so far is one, they really said they're not sure how that balance will play out. They know the mining boom's going to be very, very strong, but on the other side, this very high Aussie dollar is actually creating some strains in certain sectors, and they don't know what the net outcome of that is. And I think the market, that's why the Aussie dollar's a little bit softer and rate markets are a bit stronger, because for the market that's opening up the possibility, even though they've said rates are at the right for now, that rates could come down still. The second thing they also said, which was interesting, was non-tradables inflation, so services inflation in particular, is higher than consistent with target if you didn't have this very low tradables inflation, so if the Aussie dollar came down. So that's interesting. I think the market will probably not worry about that too much, but again, that would say, look, the Reserve Bank isn't going to get carried away in cutting interest rates very aggressively. So when I try and summarise the whole thing, I think it does say, and they did say, rates are at the right spot for the moment. Rates could still go down. They will go down if demand weakens materially, and that was an important phrase, and I think that reflects to if there was a big accident in the world. But by and large, apart from that material weakening in demand, I think they'll be adjusting rates only slightly, depending on what happens to the Aussie dollar, depending on what happens with structural change in the economy, and also depending on what happens to funding costs.
Yeah. They also recognize that there is softness in the Australian economy. The RBA is saying that retail spending remains subdued, and their view housing soft. So how many more interest rate cuts do you think that they might move on this year?
Well, we've got one penciled in for March still. Given how many conflicting forces there are, I think we'll just check whether we think that will happen by March. But look, I think at least one more, maybe two more. I think the economy is still reasonably soft, notwithstanding the mining sector is really strong still.
Okay, and also they talked about Europe already being in recession in their view. So how do you think the Australian economy is going to play out with mining still strong, but the rest of the economy, the average folks, suffering from no jobs and also not spending?
Yeah, look, it's very unusual at the moment, because on average, as the Australian economy is doing long-term trend, but just about no one is at the average. You're either stronger than trend like mining, services to mining, transport, or a lot weaker than trend in manufacturing, retail, a lot of construction, but not engineering construction. So it's very bipolar at the moment, and the Reserve Bank's trying to manage all those different variations. So the European situation is really arm's length. It's not a big trading partner. It does affect confidence, and we saw that late last year. It does affect bank funding, and that's a second-round effect. But Europe, even if it's in recession at the moment, it's only in slight recession. It's not like the GFC, and markets have, thankfully, in the early months of this, or the start of this year, have stabilised somewhat. So it's not too concerning right at this point in time.
Ivan, thank you so much for your time, your insights. Have a great weekend. Ivan Colhoun, head of Australian Economics and Property Research at ANZ.